Good morning. Welcome to the B.F. Anderson Technical Report for July the 9th. This report was done by Ryan Dietrich of LPL Research. I thought it was very interesting. We know that last quarter, the second quarter of 2020, was a record-setting quarter, up 20%. So what Dietrich did is he went back in history. Now, Warren Buffett said that, history may not repeat itself, but it sure does rhyme. I have to agree with that. There's no guarantees of any of the historic studies meaning anything. It just has to do with the possibilities and the probabilities. So what Dietrich did is he went back to 1950 and he asked the question, how many quarters did the market gain 15% or more? And what was the result in the following 4 quarters? Well, you can see here that, we were up 20%. And you can see the various quarters that he used as a record. Now, there's been 9 of them since 1950. The following quarter, the average gain was 9.5%, but even more importantly, the percent of positive quarters was 100%. So every quarter following this big, robust gain was positive. Then if you go out 2 quarters, again, 100% of the time for the next 2 quarters, and the overall gain on average was around 14%. If you go out 4 quarters, the average gain was 15.1. However, you did have a negative year here in 1987, which was the crash of 87, which was somewhat of a different situation. But the point here is that when you get such a robust gain in a particular quarter, it usually means that something really good is happening, that good things are starting to happen. So don't underestimate this. I do think this is an interesting study. Now let's get right into the charts. The Nasdaq continues to truck along with the strongest index out there. It's mainly because of technology and e-commerce and biotechnology and all the things that are new. I always tell investors, look for new things. Don't invest in the old things. Look for new things. So the Nasdaq is in a very positive uptrend. If we look at it on a weekly basis, you can see here that the 35-week moving average is in a nice uptrend. The index is hitting all-time new highs. This indicator is definitely on a buy signal. This really looks like a bull market. It is a bull market. Now on the S&P 500, you can see a little bit of a lag here. We're not getting an all-time new high on the S&P, and I think the basic reason is that you have oil stocks in this index, you have airline stocks in this index, you have bank stocks in this index, and they're not just doing as well as the Nasdaq because the Nasdaq has more technology. Again, here's the long-term graph. This is the 10-20, where we're looking at the 10-month moving average versus 20-month moving average. And we're going to talk a little bit more about that later in the video. But you can see here the strength of the Nasdaq, all-time new high, and the pattern is very positive. Here's China. We're seeing a blast off here in China. This is the Invesco Golden Dragon ETF, which is all the stocks that trade in the United States from China. Now, I'm going to also mention that later in the video as well. I'm looking at another indicator on China. But you can see here, breakout to new highs. It looks like China is doing well. This is the aggression index. This is where we're comparing and doing a ratio of the Nasdaq compared to the consumer staples, or technology compared to toothpaste. So you can see here, very strong up move. Now this is a daily graph that we're keeping. Then if we jump to the weekly graph, which is more of an indicator, we can see here that lower moving average is definitely turned up. That's the indicator that we use. And you can also see that the actual ratio is hitting all-time new highs. Very positive. These are the 3 economic indicators that we've been keeping an eye on. Interest rates flat as a pancake, nothing going on there. Here's oil. Oil continues to stay below the 200-day moving average and pretty much flattening out. This is the VIX. Now we'll talk about the VIX as well. Sorry about that. So the VIX is basically above the 200-day. Now, what we're going to talk about is where does the VIX normalize? You can see here that it got very aggressive and volatility went way up here back at the market lows, and now we're starting to stabilize. We'll talk a little bit more about that. Here is the put-call ratio. Again, this is a hot market. The institutional investors are buying more calls than puts. and as a result, we're down here in the hot territory. Again, I would emphasize, if you have stocks in your portfolio that are not acting properly, this would probably be a real good time to reevaluate. This is a daily graph of the S&P, just showing the 25-day and the 50-day moving average. Very steady uptrend. Here's the 200-day moving average. We continue to hold above the 200-day with the Standard & Poor's 500. You can see here that what was resistance now has become support. So it would be very positive if the S&P continues to hold above that 200-day moving average, which it is currently doing. This is the new lows on the New York Stock Exchange. We only had 5 yesterday. Not a whole lot going on there. We're not seeing a lot of new lows. If we start to see more than 40 a day, we start paying attention. This is the volatility index. This is the VIX. Now, the VIX, if it's greater than 30, is considered elevated, so above average volatility. Well, as of yesterday, we're at 28.18. So what I did is I went back to 1990 and I evaluated how many times have we seen extreme volatility and then immediately pull back and get below that 30 level. Well, the only other time since 1990 was 2009, which was the financial crisis. Well, you can see what's happening here. We got extreme volatility. Now it's pulled down into this area here, just like it did back in 2009. This is what volatility does when we're looking at a bottom in the market. All right, now the 1020 is an indicator that I got from Louise Yamada, who is a renowned technical analyst. She's brilliant. And she basically uses monthly charts. Most people don't use monthly charts. Most people use daily charts, some cases weekly charts. But Yamada was of the opinion that a monthly chart will tell you a lot. So what I did here was I just took off the price of the index, which is the Nasdaq. And you can see here where you get these golden crosses. Here was a golden cross back in 2003. Then we went into a bear market, the financial crisis. Then we got a golden cross here in 2009. And pretty much we have stayed, except for this minor movement here around the time of the election, we have been making new highs in this particular indicator for 19 years. And so the point is, the market does not make all-time highs in a bear market. So if this was a bear market, this graph would not look like this. Very positive. Here is another graph just to point out to you, the S&P 500 on a daily basis. What we're looking at here is the 50-day moving average. This is the 200-day moving average, and we're about to get a golden cross right here. The golden cross would be around 3,025, and we're at 31. Let's see, the 200 days at 30.25. So we are basically getting a golden cross on this particular indicator. Now on China, this is the Crane Shares China Internet. This is basically technology stocks in China. So the first one we looked at was the Golden Dragon, which is every stock. These are just the technology stocks, and you can see that it is really zooming. It looks like the market is telling us that China's economy is recovering faster than the U.S. economy due to the coronavirus. Now, they had problems earlier. Maybe it's just a factor of time. But the Chinese stocks are definitely catching on fire here. Now, we're going to get into the top 5. I want to really emphasize on the top 5 what we're trying to do here. We're basically looking at our database where we start out with 3,500 stocks. We then narrow that down to about 70 stocks using a filter. And then once we filter the 3,500 down to 70, then what I'll do is I'll take the top 5 performing stocks of those 70 and show them to you. And mainly what you notice here is you're not seeing any oil stocks. You're not seeing any bank stocks. You're mainly seeing medical technology and internet technology, mainly e-commerce. So here's Dexcom, medical technology having to do with diabetes. They make glucose monitors. The stock is in a very solid uptrend, continues to look good. This is Fastly. This is a company that makes software that makes the internet run faster. So as we see more people coming on to the internet, you can see why that would be important. Novavax. This is an interesting situation. Novavax claims to have a vaccine. Now, they were featured on Sunday morning, last Sunday, on CBS Sunday Morning. The CEO pretty much claims they have a vaccine. They are in final trials, and then the big announcement that pushed the stock up over 100 last week was a program with the federal government where they are providing capital, $1.6 billion, to start manufacturing the vaccine now, even though it is not finished final testing. So keep an eye on Novavax. They claim to have a vaccine. That would really be good news. This is Tesla. Again, Tesla breaking out, really rallying strong here. We think the market is discounting a new battery technology that will really change the whole energy industry. We're looking at the possibility of a battery technology that'll make building an electric car less expensive than an internal combustion engine. This could be a real game changer, so keep an eye on Tesla. Zoom Video, another beneficiary of the coronavirus, where people are now staying at home, working out of the home, using the technology on the internet to be able to communicate. So if you have any questions, give me a call. Things are looking very good. This is a bull market. You should be fully invested. Thank you very much.